Hi guys, it's Sterling Spectre here. Welcome back to the Mining Show. Today we're going to go over Bitcoin and its link to inflation. So right now we have seen highs of inflation as the figures just came out. As it says here, soaring gas and food prices catapult the US inflation to a 40-year high. News of a 9.1% year-on-year increase from June virtually guarantees the Fed will hike interest by 3/4 of a point this month. The US inflation accelerated in June by more than the forecast, led by elevated prices for gas, food, housing costs, and resulting in the largest annual increase in inflation in more than 40 years. The news virtually guarantees that the Federal Reserve will hike interest rates by another 3/4 of a point this month. The Consumer Price Index increased 1.3% last month after advancing 1% in May. The US Labor Department said pushing inflation to 9.1% from 8.6%. Economists polled by recruiters had forecast that the CPI would rise 1.1%. 8 cities registered double inflation, up from 4 in May. Seattle, Miami, Houston, Baltimore broke the threshold for the first time since records began 2 decades ago. The other 4 cities experiencing inflation above 10% were Atlanta, Tampa, San Bernardino, and California, which has had the biggest city inflation rate through 2022. Joe Biden urged Americans to stay calm and said his administration was committed to tackling the problem. It just goes over some quotes from Joe Biden's team. US inflation figures coupled with expectations of higher interest rates helped push the dollar to parity against the euro for the first time in almost 2 decades. The euro tanked as much as 0.4% to a low of 0.998, in its lowest level since December 2002, more than 10% against the dollar this year. The war in Ukraine has increased the uncertainty over the eurozone economy, with the dollar viewed as a safe haven as the Fed raises interest rates. The sharp rises in the US consumer prices, many economists say, is driven by a global supply chain crisis exacerbated by the war in Ukraine and the effects of the massive fiscal stimulus early in the COVID pandemic. So I'm not going to go over it all. I'll leave a link to this article in the description. But basically, a lot of inflation is going on right now. And obviously, crypto has been looked at as one of the saviors for that. So it just goes on around, the figures of what the jobs were last month, what kind of food costs, and what electricity costs, which is what we are supposed to be looking at as well, because electricity costs is, factored into Bitcoin mining. So if we see here on Twitter, there's just a thread here from the global inflation rates, and it says that the world needs Bitcoin. So basically all these countries, Lebanon, Sudan, Zimbabwe, Venezuela, Syria, Turkey, all have really high inflation rates, upwards of 100% basically. So their money is now currently worth twice as less as it was a year ago, let's just say. As we saw, Venezuela is at 167%. In yesterday's video, the least profitable country to be in to mine Bitcoin or Ethereum was in Venezuela. And this is probably due to the fact that the inflation's going up, so everything else is going up as well. So lastly, I just want to touch on why Bitcoin's good for the inflation. So this is a Cointelegraph article. There's a lot at the top. As I said, I'll leave articles in the description if you want to check it all out. But this is the main thing I want to focus on, which is what roles do Bitcoin play in inflation, and do cryptocurrencies help inflation, basically? While the economics around Bitcoin market is complex, some crypto, including Bitcoin, are designed to resist inflation or experience predictable and low inflation rates. And while Bitcoin is generally heralded as the hedge against inflation, recent economic developments have seen Bitcoin performing less as a pure hedge. So we've seen that in the current market that we've been in. Everything's just going down, and Bitcoin's supposed to be a hedge against that price going down. So it's supposed to stay at the same price, basically. Largely driven by institutional investors, the cryptocurrency has become increasingly aligned with general market movements. This means that the market goes down, Bitcoin will likely go down as well. Consequently, when news of inflation strikes, the Federal Reserve will likely enact a dual mandate. Policy interest rates will go up, and there will be monetary tightening. As a result, assets including crypto like Bitcoin will see a price decline. So do cryptocurrencies experience inflation? Yes, cryptocurrencies experience inflation, even Bitcoin, which is often seen as an inflation-resistant asset, basically. Much like gold, Bitcoin experiences inflation as more of it is mined. However, given that mining for new Bitcoin is automatically reduced by 50% every 4 years, inflation rates are also bound to decrease eventually. As long as Bitcoin values continues to rise against fiat currencies, Bitcoin's typical annual inflation rates aren't usually a major area of concern for investors. Other cryptocurrencies, however, may perform differently. Stablecoins, for example, are pegged to fiat money. As we know this, every stablecoin has a dollar amount back to it and can be considered a low volatility cryptocurrency for saving money. However, stablecoins are also subject to inflation and could lose value over time. As the reserve currency loses value, so do the stablecoins. So basically, if inflation happens, these stablecoins are going to follow that inflation as well. Or these stablecoins could end up like Terra Luna and just crashing because of the backing that is not there on the coin. Bitcoin is technically an inflationary currency. This is because it was designed to mimic the stable inflation rate of gold. As we all know, Bitcoin obviously has a limited supply right now. Because of that, it means that there's a limited amount of Bitcoin in the world, like there is a limited amount of gold in the world. We don't know how much gold is actually in the world, but it's inflationary as there's, maybe like 3% mined new every year of gold, but we don't actually know the current, total supply of gold in the world. But for Bitcoin we do, so it should be a steady inflationary curve if everything goes right and it is actually used as a hedge against inflation. To be clear, deflation is not a decrease in prices, although it's colloquially defined as such. Deflation is a monetary phenomenon that causes such a price decrease. Bitcoin then cannot be deflationary because its supply will not decrease. Instead, its supply will steadily increase until it reaches the hard cap of 21 million coins. So as it says there, it's projected to happen in around 120 years. When the cap is reached, Bitcoin will neither be inflationary nor deflationary. Instead, it will become deflationary as it was programmed to be, accumulating in a constant monetary base and an upcharge in supply. So the big question is, should we put our money into Bitcoin to hedge against inflation? That is what the main purpose of Bitcoin or cryptocurrencies out there are at the moment. So the question is Bitcoin a good hedge against inflation? While gold has long been considered the go-to hedge against inflation, cryptocurrencies like Bitcoin also provide great alternatives. Rather than inflation-proof, which suggests complete impenetrability against any outside changes, Bitcoin can be considered more as an inflation-resistant asset. As the largest, most established crypto, Bitcoin is generally considered a good inflation hedge. It may be considered a better hedge than gold. Although Bitcoin is more volatile than gold, it offers better long-term growth perspectives and therefore protects against inflation. It just goes on to continue about the inflation thing. It says that there's a limited supply and it's not tied to a specific economy or government or currency. Also, it's easily transferable. The way Bitcoin works differently to gold is that it has more value in the fact that it can be transferred instantly. So if you wanted to actually ship gold, if you wanted to pay somebody in a gold bar, you'd have to ship it. Also, we don't know the amount of gold in the earth, and they could hit big supplies of gold, which would tank the price of gold. But with Bitcoin, we know the actual hard limit for the mined Bitcoin, which is 21 million. So we know that there'll be 21 million coins in 120 years, and that's it. So far right now, I think Bitcoin is going on a journey. Obviously, it's only in its early stages. It's only been around 10 years maybe, and right now we're trying to see this movement from it becoming a kind of stock where you just invest into it and it goes up into an inflationary asset which can hedge against inflation much like gold. So we can see that Bitcoin is in yellow by here. So if you invested $1 into Bitcoin back then, this is what the price would be at right now. And this line, this checkered line here, is the $1 invested in gold. So right now gold is just kind of steady when compared to Bitcoin, and that's what Bitcoin's trying to be. Just this steady price change or this hedge against inflation. So you know that that dollar is worth that dollar, or it's not worth $1 or $2. As you can see here, the price change hasn't been that drastic, So the $1 worth of gold is still going to be worth $1 in the next whatever many years. This is the hedge against inflation that gold offers. We need Bitcoin to become like that so that it has this kind of steady line where you can know that if you put money into it, it's not going to be affected by inflation. And it's good for these countries like Venezuela, Sudan, and we've seen in El Salvador, they're trying to hedge against this inflation by putting a lot of money into Bitcoin so that their actual currency doesn't tank when compared to the price of Bitcoin. So they can keep their value in the Bitcoin and then get over the inflationary cycle that's happening in these South American countries, in these African countries. So I hope you guys did enjoy the video. If you did, please leave a like and subscribe to the channel. All links for articles are in the description below.